Good morning, everyone. We welcome you all to the webinar on Union Budget 2022 Analysis organized by Tax Connect and VILGST. I would like to introduce our speakers, Mr. Vivek Jalan and Mr. Rohit Sharma. I would like to introduce our first speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is a qualified chartered accountant, qualified LLB and LLM. He is a chairman of Ease of Doing Business Committee in Bengal Chamber of Commerce and member of various chambers. Further, I would like to introduce our another speaker, Mr. Rohit Sharma. Mr. Rohit Sharma is a senior manager at Tax Connect Advisory Services LLP. He has a rich experience in indirect taxes. During the session,
Now I like to.
During the session, if you have any queries, please write in the chat box. All questions will be answered at the time of questions and answer session. Further request yourself and keep your video off during the deliberation. Now I would like to request Mr. Vivek Jalan to take the session forward.
Good morning, all the participants, and thank you for joining. I think Samir from VILGST is also here. I would request Samir to give his opening remarks. Samir, over to you, please.
Good morning, Vivek.
Sure.
And I welcome all the participants on this Wednesday morning today.
Hello.
And thank you for joining us. We will take this session through on the various announcement made in the budget on indirect and direct taxes. Apart from that, Vivek, I would like to also want you to speak to a little bit on what we have on the salaried class, because I did not find much in that, so maybe I missed the finer point of the fine print. So would include that part as well for the benefit of our members. So over to you, Vivek, to take the session forward.
Thanks, Samir. And yeah, on the salaried class, there is not much, but yes, on personal taxation, there are a few points which I would take up, and I would cover by and large all the amendments under the income tax. Friends, what we saw from or heard from the finance minister's speech yesterday, there is a lot more in the fine prints. If you read the fine prints of the budget, there are very technical amendments which are made in both direct taxes and in GST. The finance minister only just touched upon the fact that the GST collection was 1,41,000 crore or 1,49,000 crore in January. But there is much more in GST, which we would cover in this workshop, and my co-host Rohit would also cover. Also in customs, there are amendments. One important thing in this budget, both in income tax as well as in GST, or for that matter customs, is that the CBDT and CBIC both, they have meticulously gone through the legislature and the changes as directed by the courts of India. So
Vivek, sorry, Vivek, I think there's some problem with the audio, it seems.
Is it echoing?
Yeah, it is, your voice is cracking. I mean, it's not very audible. Just have a look at it.
Then what is the issue? Okay, what I'll do is I will switch off my video Possibly there is some issue. Hello, is it now fine, Samir, or still the same problem?
It is better now.
Your voice is better, sir, now.
Better now? Okay. Please let me know in case of any issue so that we can ask our IT person to do the needful. So friends, what in this budget in direct tax as well as indirect tax, the CBDT and CBIC both have gone through the Supreme Court and High Court decisions, and to counter those decisions, amendments have been made in the acts. It may be GST, or it may be customs, or it may be income tax. Just my co-speaker Rohit will cover the indirect taxes part, customs and GST. But to start with, I would like to take up only one provision, an amendment in the GST Act. You know, in the GST Act, now the Parliament has not got much of a role, neither has the Finance Minister has got much of a role. Whatever the GST Council accepts, that only the Finance Minister proposes in the budget, and thereafter, after it is passed by 50% of the state legislatures, then it becomes a Finance Act and it is notified. Friends, this was deliberated in the GST Council. Now it is seen as a part of this Act is Section 16, Subsection 2, Clause BA. From 1st January, we have seen a restriction in input tax credit that no more extra input tax credit can be taken over and above what is available in your GSTR 2B. Now, there is another restriction in GST under 16(2)BA, which will be made applicable by notification of this clause 99 of the finance bill. Now, what is that restriction? Friends, along with 16(2)BA, I would request you to read section 38, subsection 2, clause B. Very, very important. 38(2)B. For all the people who are practicing indirect taxes in this forum and people from the industry, please do go through that. And we have seen how 16(2)AA has wreaked the havoc for taking input tax credit. Same would be there by 38(2)B. Now, what is this 38(2)B read with 16(2)BA? Input tax credit. Once these sections are notified, can be taken only when the supplier not only has filed his GSTR1, but there are 5 additional restrictions for taking input tax credit. There should be no difference between the supplier's GSTR1 and GSTR3B. So, as of now, if it is reflecting in your GSTR2B, you can take the input tax credit if the supplier has filed his GSTR3B return. But after this 38(2)B is notified, if the supplier has shown a higher output tax liability in its GSTR1, its GSTR3B is the payment of tax is lesser than what is reflected in GSTR1, then input tax credit to the recipient can be denied. Number 2, ITC, there will be a percentage of payment of GST by ITC, which will be notified under section 49 subsection 12. This is a new section, 49 subsection 12. As of now, there is a provision whereby certain suppliers can pay only 99% of the tax liability through credit. Now that percentage will be rectified and amended by 49(12). So if your supplier is restricted to take input tax credit, then to a certain proportion, And if he has violated that condition, then your input tax credit will also be denied. So for the time being, then Rohit can continue the deliberations on indirect taxes part, and then I will rejoin.
If you have a PPT, maybe that can also be shared on the screen.
Yeah. So Rohit will continue.
I will start with amendment in section 41, which was talking about ITC to be taken on provisional basis. Previously, there was a provision in section 41 that a taxpayer can avail the ITC on provisional basis. The interpretation is taken by the taxpayer that whatever ITC is taken in record in books of accounts, that can be taken on provisional basis by the taxpayer in GSTR 3B. Now this section 41 has been amended and the taxpayer can avail ITC only to the extent reflecting in GSTR 2B of that particular tax period. Recently, there was a judgment by the Honorable Supreme Court in case of Bharti Airtel Limited, where the Supreme Court had clearly distinguished that till 31st of December 2020, whatever ITC is taken in books of accounts by the taxpayer can be taken as an ITC on provisional basis since this is allowed by law. From 1st of January 2021, the law has been amended, GSTR 2B has been introduced, and from that date only, the restriction is to be taken to claim ITC on the basis of GSTR 2B. The Supreme Court has also clarified that the GSTR 2A was only as a measure of facilitation. So it cannot be said that the ITC cannot be availed if it is not reflecting in 2A. But friends, it is to be noted that after amending section 41, the ITC which is reflecting in GSTR 2B can be claimed and no ITC can be claimed on provisional basis going forward. Further, we have we have seen that there is a restriction in the GST law to do the amendment, to issue the credit note, to avail the ITC till 30th of September of the next year. Now, it happens that many of time the due date of GST audit was there, the due date of transfer pricing audit was 30th of November. So many a times the books not get closed and there is a issue facing by the taxpayer to avail the ITC by 30th of September. So the relaxation has been provided and the date of claiming ITC, date of issuing credit note, date of amendment in GSTR 1 has been extended till 30th of November. Now for amending GSTR 1 or to claim the ITC, the due date was provided, the date was mentioned that the due date of claiming ITC, the due date of filing GST return for the month of September or the due date of annual return, whichever is earlier. But now the date has been specified at 30th of November. Since this static date, that is 30th of November, the SSC need to carry out the rectification in the return to be filed for the month of October. It is also the stand can be taken that the adjustment can be done in books of accounts in 30th of November and the reporting of the same can be done in GST return in the month of November. We are expecting a clarification from the government in this regard very soon. There is a major clarification in section 50, subsection 3 has been notified regarding interest rate on ITC availed but not utilized. There was so many litigation by the department. We in Tax Connect already handled for our client one of the litigation where the department has it contended that the interest on ITC availed but not utilized is applicable at the rate of 24%. Since the case was related to initial year of 2017 when circular 26 was not there, the law was not clear regarding rectification. So the officer has issued notice to pay the ITC at the rate of 24% on ITC availed but not utilized. We have substantiate before the officer that on the basis of evidences maintained by the taxpayer that sir, we have not availed the ITC but we have not utilized for the payment of taxes, and hence section 50 subsection 1 is applicable and the tax interest rate should be 18% only. Now section 50 subsection 3 has been amended and it is very much clarified by in the law that only if ITC availed but not utilized, then the tax rate should be 18% only. Now regarding section 38, the amendment has been introduced that the ITC, eligible ITC, which is reflecting in GSTR 2B under the sheet ITC available, that can only be availed. If it is reflecting in ITC not available section of GSTR 2B, the same cannot be availed. What are the criteria on basis of which the ITC can be availed as ineligible? The criteria are if the supplier is under cooling period of new registration, if the supplier has defaulted in payment of tax, if there is a difference in GSTR 3B and GSTR 1 of the supplier, if ITC has been availed more by the taxpayer under section 38 subsection 2 subsection subclause A, if the supplier has availed the ITC more than the ITC prescribed as per the law, or any other condition provided by the taxpayer in due course, provided by the government in due course, that is that recipient is not eligible to take the ITC. So it is very much required to go through the ineligible ITC or ITC not available section of GSTR 2B of every tax period. There are major also changes regarding late fee for filing delay return by the composition taxpayer person. A composition taxable person is required to file return annually. If he will not he is not file the return by 3 months from the due date of return, he need to pay the late fee. There is also amendment in section 37. A new subsection 4 has been introduced, which restrict that you cannot proceed with filing of GSTR 1 if you have not filed GSTR 3B of previous tax period. The due date of GSTR 5 has been changed. Previously, it was 20th of the subsequent month. Now it is changed to 13th of the subsequent month. Now, one more restriction has been provided to filing GSTR 3B, that if you have not filed GSTR 1 of current month and or if you have not filed GSTR 3B of previous month, in any of the cases, you will not be able to proceed with filing of GSTR 3B of current tax period. Regarding section 54, the clarification has been issued that the due date of filing refund against supply to says it 2 years from the due date of filing of return. Further, there is as per the law, there is a mechanism that GSTR 3 will give facilitation to claim the ITC of cash ledger or on the basis of field. But since GSTR 3 is not seen light of the day, this mechanism cannot be introduced. Under subsection 10, there is a power given to the officer that he can withhold a refund of any nature. Previously, the power to withhold a refund is only related to ITC. Now, any type of refund can be withheld by the taxpayer if any tax, interest, penalty is due of the taxpayer. Regarding customs, there are 2-3 major changes which I like to discuss with all of you. There was a case decision held by the Apex Court in case of Canon India Limited, where the Additional Director General of DRI issues so cause notice to the importer, and the Supreme Court held that the ADG do not have the power to issue the so cause notice. Now, to give the power to the officer, the Customs Act has been amended, and the proper officer has been defined that even the ADG of the DRI can also issue so-cause notice. Additionally, the power to principal commissioner and commissioner has been given that they can notify or they can specify who will be the proper officer for the adjudication. So this type of cases now can be taken care of by the customs. Next, section 15, the valuation of customs is presently the valuation is done by the importer on the basis of self-assessment. Now the custom provision has been introduced. The custom officer can do the valuation of any particular import on the basis of reason to believe, if they have reason to believe that the valuation has not been done correctly by the importer. Regarding advance ruling, previously the validity of the advance ruling is 3 years from the date of the ruling or till the change in the law for the time being in force. Now the changes has been introduced for advance ruling. The advance ruling is valid after amendment till the 3 years from the date of the announcement of the ruling or change in the law, whichever is earlier. So we recommend to the taxpayer that go for revised advance ruling or additional advance ruling after expiry of 3 years period of time. There are major another changes regarding the basic custom duty and other. We request all the participants to refer to the notification issued by the customs for the rate changes. Thank you all for your patience hearing. I request Mr. Vivek Jalan to take forward.
Thank you, Rohit. And yeah, as we discussed, some big time reforms and major changes in GST and in customs, as Rohit has discussed, the changes post the Canon India case, and now all the officers, even the officers of the DRI, DGGI, they can issue you show cause notices while the amendment in this budget. So Canon India has been taken care of, in this budget. Friends, as regards income tax, as we discussed, there are some important changes in the fine prints of the finance bill. As far as corporates are concerned, there are a few very, very important changes which we will specify one by one, slowly and steadily, and you can keep on asking your questions in the chat box, which we'll answer at the end of the session. Even relating to foreign taxation, we'll cover the issues, cryptocurrencies, etc. So friends, for those of you who are looking at the direct taxation in your organizations, one important provision to be aware of is section 194R TDS. What is this 194R? You see, under section 28, subsection clause 4, income in the nature of any benefit or perquisite received, which is in the nature of business profession income, that should be liable to tax even if it is received in other than cash. Now the obligation is on the person who is making the payment of that income to deduct TDS under section 194R while making the payment in cash or in kind. Now I will explain this with the means of an example. Say for example, your organization is taking its dealers on a foreign tour. Many of the companies do this, the large institutions, as a matter of target-based schemes, etc. You don't charge the dealer, you take them on a foreign trip, and that is the incentive to work more and to sell more. Now that expenditure is claimed by you, the foreign trip expenditure is claimed by you in your income tax return as a deduction. Now while taking the deduction, you have to ensure TDS under section 194R has been deducted by you. And once you deduct the TDS, now come on the other side. Your dealer who has gone on the foreign trip has received a benefit or a perquisite in kind. TDS has been deducted on such a benefit. Therefore, your dealer has to disclose it in its return of income as PGBP income and offer it for taxation. So very, very important, neither the dealer now discloses it as PGBP income and TDS is also not there, but henceforth these will be applicable. Now, another issue in this, now what happens if this, in my example, you have not charged even 1 rupee from your dealer in cash, the entire benefit has been paid in kind by taking him on a foreign trip. So where from will you get the cash to pay this TDS of 10%? Now, so if you are not charging anything in cash, or if you are charging partly in cash, partly in kind, even then you have to collect the cash amount for payment of the TDS and deposit it. So this is a very, very important change, and the systems have to be introduced to implement this change in your, you see, companies and organizations. Another important change is in 206AB. Now, as you know from the last Finance Act, 206AB was introduced to charge a higher rate of TDS, double the rate of normal rate of TDS for those persons to whom you are making payment and those persons who have not filed two income tax returns prior to the, for 2 assessment years prior to the instant previous year, subject to the fact that yes, the amount of 50,000 rupees of TDS has been deducted for that person. Now that 2 years has been amended and replaced by 1 year, so you have to deduct a higher rate of TDS on those persons who have not filed even one income tax return or defaulted in filing even one income tax return for the last assessment year prior to the relevant previous year. Very, very important. You know, the utility for checking this 206AB has is already on the income tax website, and you can check through that. That utility will also be amended. Another very important change is on section 68. Cash, the unexplained credits. You see, in 2012, Section 68 was amended whereby any unexplained credit on account of any issue of share capital at a higher rate of premium, that was liable to tax in the hand of the recipient of such income. Now that has been extended, and Section 68 has been extended even to loans and issue of debentures. So if you have taken any loan, including unsecured loan, mind that. So any loan entry, any person to whom you, from whom you have taken the loan, if you have the income tax department will check the source of that person who has given you the loan. If the source of that person who has given you a loan is faulty, then you will be subject to Section 68 and you will be subject to tax and penalties and consequences. So very, very important now for now, if you have taken even a loan, mind that it is also from any person. So even if you have taken the loan from an NBFC and the source of the loan for that NBFC is also faulty or irregular, even then Section 68 rigors will be applicable on you. So this is very, very important and should be noted. Another, the first point which the finance minister has specified in the changes in the Part B taxation proposals is this updated income tax return. Now, yesterday night, I got a call from one of our clients. Sir, what is this updated return? Now, December में ही हमारे यहाँ पे survey हुआ था. It was just a survey. So, हम अभी return file कर दे क्या? Updated income tax return under section 139(8) capital A. Friends, updated income tax return under 139(8)(a), new provision has been introduced. Is first, now please hold, first, it is only on payment of tax by which you can file an updated income tax return under 139(8)(a. For what time? for a period within 2 years of the end of the assessment year, right? So for the assessment year 22-23, you can file an updated income tax return till 31st March 2025, right? If you have missed out any from reporting any income which should have been reported, right? However, it cannot be a refund updated ITR. It cannot be a loss updated ITR. So you can make a filing of this updated ITR under 139(8) capital A only on payment of tax, and the proof of payment has to be taken submitted by you. Now coming to my example, now updated ITR, it is not that a survey has happened on you in your case in December and you file an updated ITR और वो आप taxation के लिए offer कर देते हो अपना unexplained income, right, or suppressed income. Now, please note, you cannot file an updated ITR if there has been a search or a seizure under 132. You cannot file an updated ITR if there has been a requisition of documents also under 132A, or even if there is a survey under 133A, or whether there is any assessment, reassessment, recomputation 147, 148, 148A, 143.2, 143.3, right? But you can do it under 143.1 after 143.1 because it is an intimation. So very, very important. Only once you can file this updated ITR for a period, no more updated ITRs. It cannot go on and on. Only one updated ITR can be filed by you. So this is very, very important. And yes, it is a relaxation for those honest taxpayers who have forgotten, genuinely forgotten to report any income, and they have got an opportunity to report any income, right? Now, this is also subject to whether you have filed any ITR or not, whether you have filed belated return, whether you have filed revised return, even then you can file the updated ITR. So, a very important relaxation for those genuine taxpayers who have actually forgotten to report any income in their ITR. However, if you file the updated ITR by disclosing additional income, please note under section 140 capital B, if you file the updated ITR within 1 year from the relevant assessment year, then you have to pay 25% extra on 25% on what? On tax, penalty, interest plus fees plus 25%. If you file it after 1 year but before 2 years, then 50% extra, right? So this updated ITR comes with an additional burden also, but at least you can disclose your unexplained your additional income which you have forgotten, and you can rest in peace. Friends, another important amendment following the High Court and the Supreme Court decisions is under section 37 subsection 1. Now under section 37 subsection 1, it was specified that in case of any illegal expenditure, any expenditure apropos violation of any law for the time being in force, if you are doing, then that expenditure shall not be allowed as a deduction to you. However, various high courts, the Rajasthan High Court in the case of Chambal Fertilizers, the Bombay High Court, the tribunals have held adversely against the department and have held that in case, specifically in case of pharma companies. Now, what is the case in pharma companies? The doctors are given freebies, gifts, free samples, etc. by the pharma companies, which is unethical on the part of the doctors to take from the pharma companies. However, the courts have ruled in favor of the assessees that assessees can take the deduction under 37(1), because on the part of the pharma companies, as per the medical association's rules, it is not unethical or not illegal to distribute freebies. Whether it is unethical in the part of the doctors, that is a separate case. So the courts have ruled, the Rajasthan High Court in the case of Chambal Fertilizers recently, and many other high courts tribunals have ruled in the favor of the taxpayers. However, the apex court has ruled, and even the ITAT Kolkata in the case of Kanodia Chemicals have ruled against the taxpayers, and there has been adverse judgment. So in this budget, an explanation will be inserted on notification as a Finance Act that any illegal expenditure or any expenditure for violation of any law for the time being enforced, and please mind that, please hold, any violation not only under Indian law, any violation even under a foreign law, that will not be allowed as a deduction under 37(1). That is a major amendment in this budget under 37(1). Another important amendment is under section 43B in case of deduction of or interest paid to financial institutions, NBFCs, etc. So under section 43B, the deduction for interest to financial institutions, etc. is allowable only on payment basis. So once you pay the interest, only then you can take the deduction. Now, various courts have ruled that even if this interest is converted into a loan or even a debenture, then it will be construed as constructive payment. While this finance bill, it has been proposed that constructive payment of interest or conversion of interest into loan or debentures, that would not be regarded as a payment for the purpose of section 43B, and therefore interest paid by means of converting it into loan or debentures would not be allowed as a deduction in the Income Tax Act under PGBP income. So important point for the organizations to take care of. Well, for the manufacturing companies under who have gone under 115 BAB, under the new regime for taxation at 15%, there is a relief, whereby the manufacturing companies, it was required that they start their manufacturing operations by 31st of March 2023. That date has been extended by 1 year. So manufacturing companies under 115 BAB can initiate the operations, can commence their operations till 31st March 2024 now, and still enjoy the benefits of 15% of tax. Similarly, for startups to be eligible under ATIC as a IAC as an eligible startup, you had to commence your operation by 31st of March 22. 1 year period has been extended, and now the startups to be an eligible startup and get the benefit of exemption under deduction under ATIAC, 100% deduction for 3 years out of 10 years, that the startup can commence its operations by 31st of March 2023 now. COVID relief. Now, friends, while the taxation amendment laws, it was notified that in case any reimbursement of actual expenditure done by an employee and which is reimbursed by the employer, then without any ceiling limit, that will be allowed as a deduction for the employer, and it will not be taxable in the hands of the employee. Similarly, under 56(2)(10), in case after the deceasement of an employee due to COVID, if the family members or the relatives of the employee are paid any amount, no restriction by the employer, then that would be allowed as a deduction to the employer and will not be allowed under 50 and not be taxable under 56(2)(10). That has been now notified in this Finance Act once it becomes a finance bill, once it becomes a Finance Act. Also, any amount received from any relatives, friends, etc. up to 10 lakh rupees, that would not be taxable in the hands of the person who receives such amount under 56(2)(10), but up till 10 lakh rupees. So that has been proposed in this budget. So now to answer Sameer's question, what is there for the salaried taxpayers in this budget? Now this one is for the salaried taxpayers, no perquisite in case your employer pays you any money for the COVID treatment, right? So to the end, after deceasement also, if it is paid to the deceased person's family members. So to this extent, I feel this budget has for the salaried class, and I don't think any other provision is there for the salaried class in this budget, what comes from the fine prints of the budget. For again, the under 194 IA, now when you are purchasing a house property or when you are selling a house property, where the value of the house property is more than 50 lakhs of rupees, the seller has to deduct, the buyer has to deduct TDS at the rate of 1% under 194 IA, right? And it is a PAN based TDS, no TAN number is required, etc. Now, under 194 IA, an amendment has been proposed by which this TDS at the rate of 1% would be liable on higher of the two values, stamp value or the transaction value, right? Consideration paid. So that the similar to that 50C, the same amendments have been made under 194 IA for TDS also. So this is very, very important for the now in as far as the individual taxation is concerned when you are selling the house property. LTCG relaxation, LTCG surcharge relaxation, I would say. Now, LTCG, there was various limits for LTCG surcharge, 1 crore, 50 lakh to 1 crore LTCG, then there would be a surcharge of 10%, then 1 crore to 2 crores, 15%, then 2 to 5, 25, then 37, etc. Now that surcharge has been capped at 15% as far as LTCG under 111A and 112A or any LTCG is concerned, right? So now this is a welcome move, because any person who is selling one house property in his whole lifetime unnecessarily, from 15% you burden them with 37% surcharge, 37%, and if you see a highest marginal rate of 30%, then it would be quite a substantial amount. So this LTCG surcharge is capped now at 15%. This is a very important relief as far as the selling of house property and capital assets is concerned. Now, friends, again, under various judgments of the courts, the education cess, and also there was a CBTT circular of 1967, whereby in 1967 by this circular, CBTT held that cess is not a tax. However, that circular was in relation to state cess and not to income tax. There is a Supreme Court judgment, I think in the case of Srinivasan, where it is held by the Apex Court that there are 4 types of taxes. One is the actual tax. Then there is a surcharge, right? What is surcharge? Surcharge is additional tax. Then there is additional surcharge, right? And then there is other taxes. So even this cess, it is in the form of an additional tax or surcharge on the tax itself, and therefore it is now under section 40. It will be clarified that no deduction for education, higher education cess shall be eligible under the PGBP income. And this is again a retrospective amendment, as if it is, or it has always been there. So now this education says this thing is also clarified, and this was also, laid by the finance minister in her budget speech. Okay, the entire faceless assessment under 144B, that has been revamped. Entire 144B has been revamped. Now possibly they must have, there is so many technical glitches for this faceless assessment, so they had to revamp. So, but the scheme is simple. The NFAC will issue a notice and allocate an assessing unit. Then there will be a technical unit will be assisting the assessing unit. NFAC, National Faceless Assessment Center, that will be regulating this whole faceless assessment. There, now this is a very important amendment in the faceless assessment, that in case a oral submission is required to be made, the taxpayer or assessee can always approach the NFAC, and the NFAC shall provide an opportunity for oral assessment also, for oral hearing also. This is a very, very important amendment, because it was almost impossible to only by written submissions to convince the assessing unit and then the review unit of any particular case, and then the assessment unit or even the review units for that matter. We have seen so many adverse orders, because they will take out a point from somewhere, and that would be the pretext of passing a adverse order, and it is not possible also many a times to explain only by way of written submission. One-to-one oral submissions, you can convince the officer, you can put forth your point. So this is a very, very important amendment, and in the revamping of the faceless assessment scheme. The provisions with respect to trusts under section 12A(b), section 11(13), and parallelly under 1023C for educational institutions, non-government organizational, the hospitals, etc. So there are 2 types of exemptions for charitable organization. One is under 1023C, one is under section 1112AB or section 13, combined. Now there were differences between both the schemes, right? So there were certain points under section 1112AB, section 12AA, section 13, which were not there in section 1023C. Now both of them has been aligned. For regulation, a lot of amendments have been done. For example, for under section 12A(b) and section 11, you had to, you could not accumulate more than 15% of your receipts every year. And you could accumulate till 5 years, right? And if you do not spend it within 5 years, then in the 6th assessment year, it would be liable to tax. Now that 6th assessment year, that has been amended to the 5th assessment year itself. Again, 1023AC, there was no requirement of filing this form 10A as required under section 12AB to file a form where the accumulation is more than 15%. Right, so various amendments under both these schemes for the trust and charitable organizations to align both the schemes and regulate both the schemes. And it is important that for trust and for charitable organizations, non-profit organizational, section 8 companies, they please go through this amendments of the trust. There are very important amendments even for the investments. The investment where the trust can do an investment, that has been amended. So very important amendments for trusts and non-profit organizations, NGOs, etc. to go through. 272A, in case you do not submit documents required, you do not submit information, certificate, returns, information, etc., then there was a penalty under 272A at the rate of 100 rupees per day of delay. Now that has been increased to 500 rupees. So again, more penalties are there. So friends, by and large, this is it. Yeah, cooperative societies, again, there is an amendment, for the cooperative societies that the surcharge rate has been reduced from 18.5 to 15%, and for the cooperative societies. Now, as far as foreign taxation is concerned, big bank reform, cryptocurrency, section 115 BBH, and this, just a second. Yeah. So, foreign taxation, cryptocurrency, 115 BBH has been proposed, whereby any virtual digital asset, very, very important for those who are dealing in cryptocurrency, please go through this section 247A, 2 subsection 47 capital A, where virtual digital asset has been defined to mean cryptocurrency, to mean any signal, anything. You might call it anything you want to call, logarithm or log or anything. That the transfer of virtual digital asset will be regulated by the RBI, and that will be taxed. Even which is not regulated by the RBI will be taxed at higher rate of 30% under 115 BBH. Is it a capital gain? Answer is no, it is not a capital gain. It will be treated as speculative income possibly, but it is not a capital gain. Otherwise, long-term, short-term things would have been there. The person who is okay, so no other deduction would be allowed other than cost of acquisition. Loss under cryptocurrency transfer, that will not be allowed to be carried, to be set off against any other head of income. Now, question one of our clients, he was asking us, sir, now in one of the transactions in cryptocurrency, maybe with one exchange I have done a loss, with another exchange I have done a profit. Will I be allowed to set off at least these two transactions, one loss, one profit, for the same cryptocurrency or virtual digital asset? Well, my submission in this case is yes. It should not be transaction wise taxation. It has to be head-wise taxation, and only against other head of income you cannot set it off. So you cannot set it off as a against a PGBP loss, etc. TDS under 194S at the rate of 1% needs to be deducted by the person who is transferring the cryptocurrency. So if you are transferring the cryptocurrency, then you have to deduct the TDS, and no exemption limit, no slab is there for such a transfer. And even if you are a person whose income is less than 50 lakh, 1 crore, etc., it the 194S would be applicable. 194S would supersede all other TDS provisions, even 194O. So if you are liable to deduct TDS under 194O or 194S, 194S will prevail. So now friends, on this note, you see, cryptocurrencies or virtual digital assets have been widely discussed. Even the GST department, right? The DGGI, I am aware of this, that DGGI is also investigating, also forming a note on how to tax the cryptocurrencies. The question is, what about GST? Income tax का तो साफ बता दिया आपने. What about GST? Will GST be applicable on cryptocurrencies or no? Will cryptocurrencies be money under Section 2, Subsection 75 of the CGST Act? Well, my submission at this point, while as of now, the law will unfold, substantially. But my take is, you see, under 56 to 10, they have also defined this cryptocurrency as a property. So what I understand is, under GST also somehow they will bring it under 252 and not under 275 of the CGST Act and tax it as transfer of commodity, right? So, but let us see how the CGST GST Act unfold. Of course, there will be a implication of GST also on these cryptocurrencies transfers. Dividend received from foreign companies that was taxed if in case there is a holding of 26% in the foreign country. So when a domestic company received a dividend from a foreign company where it holds 26% of the share, that was taxed as a lower rate of 15%. However, if the same domestic company received dividend from a domestic company itself, that was taxed at a higher rate. So to all the domestic companies, they were a little annoyed that why this discrimination is there. So provide a level playing field for dividend to be received from foreign companies as well as the domestic companies, that lower rate of taxation for dividend to be received from foreign companies, that has been done away with. So even if you are receiving a dividend from a foreign company where you hold 26% or more of the shares, even then dividend would be taxed at a higher rate now. Section 263, reopening of assessment by the principal commissioner, chief commissioner, or commissioner. So reopening of assessment or transfer pricing officer, which is done by a transfer pricing officer in case of determination of arm's length price. There was confusion as to who will reopen the assessment, where the assessment has been done by the transfer pricing officer. The case has been referred by the assessing officer to the transfer pricing officer, who will do the reopening. Now it has been clarified that the reopening would be done by the principal commissioner, commissioner, or chief commissioner of the jurisdiction of the taxpayer. So this is it regarding the foreign taxation, I suppose. Oh yeah, another thing is 239A, very important for payments being made where TDS is deducted under section 195. So now in case you are deducting TDS under 195 for payments made to a non-residents, but you find that you have wrongly deducted the TDS for payment made to a non-resident. Okay, so as of now, you cannot claim the refund directly. You have to go through 248 appeal route. You have to file an appeal, then you have to claim the refund. So this is a tedious process, time consuming, and also a lot of money is spent on this appeal. So now new section 239 capital A, that has been proposed in this budget, whereby In case you have paid an additional amount under 195, you have paid TDS and you find that TDS is not applicable, you can directly claim a refund by filing an application under section 239 capital A. Right. I think more or less we have covered almost all the provisions, more or less. Yeah. Okay. So goodwill for no depreciation would be allowed on goodwill. That was in the last Finance Act, it was notified. Now there is a clarification that now from what you do, if you have goodwill in the block of asset, purchase goodwill on the block of asset, you cannot claim depreciation. So you have to remove that goodwill from the block of assets. So for transfer of this goodwill from outside the block of asset on which depreciation will not be allowable, there would be a capital gain, but this is just notional because you have the cost of acquisition also. So that is just clarificatory. Yeah, there is one more under section 79 capital A. 79. Yeah, so in such cases, this is the last year, only yesterday somebody was asking me this, so I thought of clarifying this over here. Now, what happened in a search or seizure case under 132A, right? If there is an unexplained income, if there is a seizure of cash, etc., unabsorbed depreciation and carried forward loss, additional depreciation, unabsorbed depreciation and carried forward loss would not be allowed to be set off under with the income which is sought to be taxed under a search operation, right? So somebody yesterday they were, he was telling me that no, now abhi jo cash search में मिला है या सीजर में सीज कर लिया गया है, any income which is found under search seizure वो पैसा गया, now even you cannot claim claim any income tax which has been paid on that, etc. It is not that. Only unabsorbed depreciation and carried forward loss that cannot be set off against this income which is unearthed under a search or seizure operations. So friends, I think most of the points we have covered over here in the which are there in the finance bill, and we will take the questions which are there from the participants. Yeah. So Rohit is showing me something. Okay, I'll see from the chat box. Whether recredit, Mr. Shiva Ramakrishnan says whether recredit is eligible. Recredit is eligible if once it is rectified against restricted tax credit. Yeah, of course. Rohit will better explain this. Rohit, if you can explain whether this recredit is eligible.
Yes, regarding this recredit, it is clearly mentioned in the amended provision in the finance bill that once the supplier will comply with the law and he will pay the tax, the recredit can be taken by the recipient of the goods or service.
Okay. Next is Mr. Pawan has asked, in case of your example, companies are paying to tour operator, not to a dealer, then what would be the situation, sir? In my opinion, 194R would be deductible because it is a payment to a tour operator, fine, but it is the payment is in the nature of any benefit or perquisite which has been given to another person. in the nature of business during the conduct of the business or profession. So 194R should be applicable in this case also. Okay, Mr. Muthukumar, people are saying PPT, friends, since yesterday the budget had come, there were so many interviews. So Rohit has prepared his PPT. That PPT will be shared with you. Our budget analysis also on both direct tax and indirect tax proposals would be shared with you once this webcast is over. So from that only it will cover all our analysis which we have discussed. Okay, Mr. Rajaraman says, can you please elaborate on the delay in payment of the employee contribution of PF as inadmissible expenses while most of the SSC are paying before the filing of IT return, both employer and employee contribution to PF. Is there any retrospective amendment on this? No, there is no amendment as far as the delayed contribution or of the PF. The amendment is respect to the interest under 43B. In case interest is paid, which is not paid but converted into loan, then that will not be allowed. There is no amendment as far as at least to the extent what I have read the fine prints on this PF delayed payment, right? But before filing of return. Okay, Nirmal ji says, sir, whether NFT will also be a part of VDA. Sir, what is VDA? Oh,
virtual digital assets.
Okay.
Yes.
And NFT?
NFT non-fungible token, sir, which is the new
Nirmal ji,
craze,
if you could
basically.
kindly clarify this, your question.
Sir,
Mr. Vinod Periwal, it should come under GST as it is not a currency regulated by the government. FM has self-appointed cryptocurrency asset and not a currency. Yes, Mr. Periwal, I also am of the or similar opinion. Cryptocurrency should come under GST. But let us wait. Let us wait until the GST law is amended. Mr. Srinivas, any changes to custom tariff with regards to information technology products, sir? It is not possible, I feel, to remember all the amendments in the rates of customs. But Rohit, if you remember for IT products, I think there is mobile phones and all. There is a amendment in the rates. Rohit.
We need to check the notification, sir, because there are so many changes in the rate notification. We need to refer the notification for this.
We will share our analysis, and in that you will see a gist of all the changes in the customs rate. Okay, Mr. Mehta says a great show it was. Thank you, Mr. Mehta. Mr. Rajaraman, can you please elaborate on the delayed payment of the? Okay, we have covered this. Okay, we have covered. From Hina Kausar, are the family members of the deceased pensioner required to file IT return? Yes, ma'am. In case the IT if they are above the threshold limit liable to file income tax returns, of course they have to file and disclose this also as an exempted income under 56(2)(10). Mr. Rajesh says last 2 years return filed with additional income, then only tax as per law and interest to be paid, or tax will be high. Tax, yeah, if you're talking about this updated income tax return, yes, the tax would be a higher one, right? Because of course you will pay only the tax, no interest, no penalty. But if you have disclosed a higher income, then it will be a higher rate under 140 capital B. What is the update in SEZ in this budget? Yes, the finance minister was speaking about SEZ. There is a sunset clause and that will be amended. But we have to check the fine prints of the finance bill regarding the SEZ Act that is supposed to be revamped. Okay, Mr. Zakir Hussain says, is crypto Bitcoin trading in legal now? Are there? So I think the Revenue Secretary yesterday, he has clarified that even in income tax, even an illegal income is liable to taxation, right? So they have created a provision over here, but they have not legalized the cryptocurrency, right? Or also please understand that this provision is applicable from financial year 23-24. So the Revenue Secretary has already clarified this. Okay, yeah, Mr. Nirmalji has said NFT means non-fungible tokens. So yeah, of course, yeah. So if you see 247A, this non-fungible tokens, that will also be a virtual digital asset. Now, thank you for Nirmalji for this NFT and VDA. That will be very useful. Okay. Release of Mr. Mittal says release of films online is also virtual. Okay, so Mr. Mittal, if you are connecting it to a virtual digital asset, so let us let me open this 247A. You have to go through this 247A, sir. I am, again and again stressing on this point. This is a very important Section 247A. This will have long-term implications. The definition of virtual digital assets. So let us understand virtual digital asset, the definition. Any information code or number or token generated through cryptographic means or otherwise by whatever name called, providing a digital representation of value exchanged with or consideration with the promise of representation of having an inherent value or functions as a store of value or unit of account, including its use in any financial transaction or investment, but not limited to investment scheme, can be transferred, stored or traded electronically. 247A(b). Nirmalji, here your answer is there. Non-fungible token or any token will be a virtual digital asset. Any other digital asset as the center government may lay down. So to answer you, Mr. Mittal, now your question is on online films. Now here, see, your digital asset should have a inherent value. Now, this is an important thing, and it should have any financial value for a financial transaction. Prima facie, it is my view. I may be, you may be right, I may be wrong, whatever how the law evolves, we have to see. It is a very prime, the very starting phase of this law on bitcoins and cryptocurrency. But my primary view is that this online films, virtual online films, that should not be taxable as a virtual digital asset, right? Because they do not have any inherent financial value. So, but let us see how it evolves further. Mr. Ashish says penalty, whether any penalty applicable for ITC wrongly availed but not utilized, only if it is not suo motu reversed. If it is found out by the department, then they will allege suppression, etc., etc., and levy all sorts of penalties. But if it is suo motu reversed, no, you see, penalty should be there. Mr. Ramanujam says amendment made in Customs and Validation Act effective negates Supreme Court decisions in Canon India case. Yes, Mr. Ramanujam, you are right. Rohit also has specified as such. It negates the Customs Canon India judgment. Is it legally right to introduce a provision to rectify the earlier actions done? Sir, this is always has been a debate in the taxation area, even in income tax, with this Vodafone case, retrospective amendment. So many retrospective amendments are there. Just now you see section 37(1), retrospective amendment, 43B, as if it should have always not been taxed, retrospective amendment. All of these are retrospective amendments. Even in the memorandum, even in the notes of clauses, they have said that even after the High Court, see, please, very, very important point. I will just take 2 minutes on this question. You see, when they are saying that education cess will not be liable to eligible as a deduction, when they are saying interest, constructive interest will not be liable eligible as a deduction or disallowed under 43B, payments under 37(1), they are negating High Court orders by referring to certain other orders. And they are saying that these High Court orders
પેલું જે સેટમાં આપ્યું છે ને
if they have
એમાં પ્રાઇમ
not
બેનની સાઈનો
taken
બાકી છે
any
એટલે ખાલી
reference
તમારા
to
પેમેન્ટની
some
શીટમાં એડ
Supreme
કરી
Court
લેજો
order,
અને પછી પાછું પ્રાઇમ
maybe
બેન
it
ટેબલ
is
પર
not
મૂકવાનું
one-to-one correlation, but
પ્રાઇમ
they
બેન
are
ટેબલ
even
પર
saying High Court orders are per incurium. What is per incurium? When an order is made by a High Court in
Vivekji, you are on mute, sir.
Yeah. So, Mr. Ramajam, to answer you, yeah, I went into mute somehow. So to answer you, yes, as of now, to negate a apex court's order by a retrospective or a prospective amendment in the act is not illegal. Yeah, Mr. Natik, I have just repeated that, they are negating the High Court orders. Even in the memorandum, they have said that this education cess eligible as a deduction, 43B interest, 37(1) illegal expenditure, all of this, they have said that these High Court orders are per incurium, not taking into account other orders of the court. So as of now, they can negate an order of a High Court or a apex court by a retrospective or prospective amendment in the act. So thank you to all the participants for joining on this Wednesday morning, early in the morning. I hope we have been able to clarify most of the provisions in the fine prints of the budget and the finance bill yesterday. In case of any other queries, you can always write to us on our email IDs, etc. The PPTs would be shared with all the participants. Thank you very much. Samir, if you are there, over to you.
Thank you, Vivek. Thank you very much for taking us through the entire, nitty-gritty of the finance bill, and you have mostly covered
Samir,
entire
are you there?
direct and direct taxes. So we for
Okay,
any
so
other
I see
query,
Samir is not there. Thank you very much for a patient hearing. Thank you.
Thank you. Samir sir.
So for any query, you can always forward us the all your question to us, and we will take it up with Vivek and try to answer it. Thank you, Vivek, and thanks for attending this seminar. Thanks. Thank you.
Thanks,
Thank you
everyone.
very much.